Cynthia Nyamai. Now, Tullow Oil has redesigned its crude oil development project in Kenya that will see the company investing an additional 340 billion shillings. The company says the increase in the expected capital expenditure is due to additional wells to be drilled and larger diameter crude oil export pipeline. As Hibaq Said narrates, Tullow Oil, which is scouting for a strategic investor, projects to mine 585 million barrels of crude oil in Kenya.
Tullow Oil started operations in Kenya in the year 2010 and in early 2012 announced that it had struck crude oil in Turkana. The company has been in the market scouting for a strategic investor and hopes to seal such a deal before the final investment decision is submitted to the government before the end of this year. In its first half investor briefing, the company says it plans to produce about 585 million barrels of crude oil in Kenya. Tullow Oil has also revised crude oil development project for Kenya and projects to invest an additional 340 billion shillings in its upstream activities as well as the pipeline between Turkana and Lamu. In a statement, the company says the increase in capex from the previous design is due to a bigger facility processing capacity, additional wells to be drilled and larger diameter crude oil export pipeline, which delivers 30% increase in resources whilst lowering the unit cost to $22 per barrel from the previously $31 per barrel. It says the revised development concept allows greater flexibility in adding oil fields into production without significant modification to the project's infrastructure. The firm has announced that the 825-kilometer pipeline that will transport the crude oil from Turkana to the port of Lamu will be heated and buried to avoid any disruption in the long term. Further, Tullow Oil plans to carry out more exploration drilling in the Blocks 10BB and 13T licenses as well as exploring potentials in Blocks 10BA and 12B. Reporting for Primetime News, my name is Hibaq Said.